And this is Sherri. And this is Real Estate Tips with SNL. Today we're really excited. We have a guest speaker, Sophia Bell from Total Mortgage. And we were hoping that she would share some insight and information on what's happening in the lending.
For sure. So first, I just wanted to say thank you for inviting me to be your guest speaker today. That was awesome. I'm very excited about that. So a little bit about myself. So I've actually been licensed for myself for about 5 years. So I'm a senior loan officer with Total Mortgage out of the Leominster branch. But before that, I actually spent about 14 years in the banking industry and just realized that, you know, I was losing more and more touch with the client, and that was just kind of what I got into it for. So I decided to get licensed and do it for myself. So to answer your question as far as what's going on in the market today, I find that it's a hard market. You know, there's not a lot of inventory out there. We're in like record low. You know, there's one house left in Leominster right now for sale.
It's crazy.
Yeah. So it's important. You know, I do everything I can to try and make sure that, you know, our clients are standing out and giving them the tools that they need. For sure, it's a lot harder of a market today than I think it was. And then you couple that with, you know, plus there's COVID, and then, you know, so you're dealing with, you know, people being uncertain about wanting to go into somebody's home, and so I think that kind of slowed it down a little bit. Still busy, but, you know, maybe not so much like we were if we had a whole bunch of houses on the market.
What do you see about, like, as far as pre-approvals and things like that, like new buyers coming in?
Yeah, so I do see a lot of new buyers. I would probably say that what's tough is when you have one house for sale in Leominster, for example, you have 20, 30 buyers in that price bracket, all trying to make an offer on that particular property. So although it does still seem busy and we're still issuing out a lot of pre-approvals, bringing them to fruition is probably not as much as it used to be because there's not nearly as much inventory out there for us.
Now, I mean, we're hearing a lot of buzz about interest rates going up.
Yeah.
You know, I assume that also equates more buyers getting pre-approved now, trying to beat that number and rising.
1,000%, yeah. So that's a great point. So to that point, a lot of the things that I hear is, well, I'm going to wait for the market to kind of plateau and I'm going to wait for the prices to come down. Well, here's a fun fact for you. Prices come down. Now what? Rates go up. Well, now your payment's the same.
Right.
So however you look at this, whether you're looking to purchase now or you're looking to purchase in spring or summer or even next year, at the end of the day, you know, it still kind of washes itself out because rates are slowly going up, and they have been for a few months now. But now when you look at it, let's say the purchase price comes down a bit, and when the purchase price comes down but your rate's going up, you know, you're going to end up with the same monthly payment.
That totally makes sense. What I was thinking about is the second home buyer.
Sure.
You know, there's a lot of that going on. And I know there's some changes with that. Can you share?
So there's definitely some huge changes, unfortunately. You know, they're not making it probably as competitive as they used to be, where you could go get a second property and have a pretty good, you know, I say comparable rate as if it were your first property. Rates have gone up a bit on multifamilies as well as second family properties.
I hear that. I'm seeing more FHA type of offers for multis versus conventional, and
for sure. And it's funny that you say that because actually FHA has changed like some major things that they've had for years, right? And one of the things is school payments. School payments used to calculate at 1%. That was FHA's thing. Now it's 0.5%. So now all those people that particularly maybe didn't qualify before, now they qualify, right? And so they didn't change the guidelines necessarily on multifamily. They're like one of the few left that actually make it pretty easy to get into multifamilies.
I know that loan limits, you know, have always been an issue, and where we're working primarily in the Worcester County market, we feel like we've always gotten the short end of the stick because they've been so low, but they've gone up.
Right? Considerably, actually. So FHA, it used to be, you know, mid threes, and I think now where the market has risen, and just in general to go with the times, right? They're realizing that they also have to raise their loan limits. So FHA has actually raised their loan limit a little more than $420,000 in the Worcester County for a single family property. But what's important to understand is that when you're talking about loan limits, it actually changes per tier, right? So like when you go into a second family, the loan limit goes up. When you go into a third family, the loan limit even goes higher. And then when you go into county, the loan limit changes as well. So it's important to understand that whatever loan limit you're looking at isn't a blanket loan limit, right? It's a loan limit per per unit, per county, you know, things of that nature.
Right. Yeah. I have had people who have said, you know, listen, I'm FHA approved, but I want to go look in the Middlesex County because
huge difference.
It's going to go a lot further. Yep. And for us, that could be the difference of just shifting over one town.
Yeah.
So yes,
for sure. And you know, and to kind of piggyback on that, even the conventional loan limit came up a ton. The conventional loan limit came up almost 100,000.
Yeah.
You know, and that's huge when you have a borrower who was on the cusp, right, of potentially buying a single family property, and then you end up in what's called the jumbo loan. And now you need 10, 15, 20% down. That kind of washes that out. So I think by raising the loan limit really kind of opened up the buyer's pool.
That's great. Are you seeing, I mean, I know that last year we had some really great interest rates and there were tons of refis.
Yes.
Are people still refinancing?
Yeah, as much as I would hate to say that I think the refi bubble has busted a little bit, it's still there. You know, there's still an opportunity, but I would probably say many of the people who actually were in the refi market probably already kind of refied at that point. Now, the rates are slowly going up, so the rates are still competitive. I think what's hard is that people kind of compare, you know, a historical point in time to now, and they think, oh, 4.25%, that's a terrible rate. No, that's actually still a really good rate. And rates were 5, 6, 7%. We're comparing it to 2008, right? It's kind of, you can't, it's not apples and apples.
You go back a lot further than that. And we all heard, geez, when my parents bought, the interest rate was 18% or something crazy.
For sure.
But I feel like, you know, in the last maybe 7 years, we kept hearing it's going to go higher, it's going to go higher. And every time we would hear that, it would go lower and lower.
It was crazy.
And even when there was fluctuations, I can't remember the last time it was over 5%.
Right.
You know? And so even a rate that's in the 4s versus one that's in the 3s is still very good.
A great rate. And I think what's important for people to understand, you know, if you're potentially looking to do a refi, is that it's not, yes, it is about rate. You want to get the lower rate, but you might be saving more than you think because you dropped your rate maybe 0.5%, but now we can get rid of PMI. And so it's not just so much about the rate. So do I think the refi pool is dried up? No, but I would probably say I think that wave has come and gone from as of last year, but there's still an opportunity. You can drop PMI and you've only saved 0.25% on your rate, and now you've opened up a $400 a month savings.
So I just want to talk about PMI just because you know, we know what that means. But maybe if you can explain what PMI is and how much that equals.
Yeah, absolutely. So PMI typically, so years ago when you were in the market to purchase, you typically needed 20% down, right? And so, but houses were also like $80,000. So it was a lot more feasible to have somebody have 20% down on an $80,000 property, right? Statistically, people are less likely to belly up and walk away from their property if they have more than 20% equity into their property. So, so PMI typically protects the lender if you were to belly up into default.
And that's how much is PMI per month in a mortgage?
So it's actually calculated. So what we do is we shop out about 12 or 15 carriers, I'd say. It depends on program because one program has, actually two programs have, it's formulated no matter what it is. It's the same formula and it's a percentage based off of the loan amount. But if you're not in those two programs, we actually shop out about 12 different carriers and we find out who has the best pricing for PMI. So it's actually not a flat cost. It all depends on who you're going with.
Okay.
Interesting.
All right. Well, thank you so much for this. Has been really valuable information.
Yeah,
I was going to say, and maybe you want to touch base briefly on that. You know, Total Mortgage has a green light program.
Yes.
And I would love for anyone who's watching this video to be able to reach out to you to talk about it because I think it's a great opportunity for a buyer that's trying to put in a competitive offer. You know, you're right here, well, in Leominster at Total Mortgage. And I would say that someone should ask you about the Green Light program.
Yeah, so let's talk more about Green Light. So actually the Green Light program is a great program that I really think gives Total Mortgage an edge in the area. I really highly encourage borrowers to go out and go to their lender, ask them, what are you doing for me to make me stand out? And I think what's also important for borrowers to understand is that when you're shopping, it's not just about rate. It's not just about the most competitive program or the best rate, but it's also about, good service. How is my offer going to get accepted? Because let's face it, my job as a lender is to get that borrower to the closing table uneventfully, smoothly, on time, right? But if our offer's not getting accepted, then what?
Yeah.
I think what's important is that, if you have one house in Leominster, let's say, and you have 20, 30 borrowers, I think what's important to realize is that, how can you make your offer stand out? Greenlight does that. And so for an example is Greenlight actually takes you one step above a pre-approval. So pre-qualification isn't as competitive. A pre-approval is definitely more competitive. But a Greenlight program is actually leaps and bounds over a pre-approval. It makes you far more competitive. It literally is a financial transparency to your loan that you're giving the seller to say, hey, listen, I'm already conditionally approved. And so you're essentially, I hate to say a Christmas gift, but you do stand out. Now couple that with the fact that we could potentially close that loan out sooner. And what's crazy to say is that we might be able to close out that loan, in 3 weeks, which is insane to say you can close a mortgage in 3 weeks or less.
We don't hear that.
So if you have a borrower who is among 20, 30 people, and they're all pretty similar in price, but you have a commitment letter on top of the fact we can close sooner, ultimately it just makes you a lot more competitive. So highly encourage borrowers to go out there, ask your lender, what are you doing to make me stand out? Because ultimately in today's market, the most important part is getting your offer accepted.
All right. Well, again, thank you so much for coming.
Thank you.
Thank you.
So Lana, Sherri, and Sophia, you can find Lana and I at Coldwell Banker in Leominster, and Sophia over at Total Mortgage. And we thank you for tuning in, and we hope that these tips were helpful to you.
Thank you.
Thank you very much.